Hello and welcome. In this lecture video, we'll be taking a look at the quick ratio and also doing some practice problems, okay? All right, so the quick ratio is also called the acid test ratio, and it takes a subset of current assets that are highly liquid. Okay, so what do I mean by liquid? It means that can be quickly turned into cash. So it takes a subset of our current assets that are highly liquid and divides those by the current liabilities. So it's very similar to the current ratio. The denominator is the same, current liabilities. The numerator, though, is only those current assets that are highly liquid. That's in the numerator. So what do I mean by quick assets? It's those assets that we can be quickly turned into cash. Examples are cash, short-term investments, and receivables. So all current assets are quick assets, but not all quick assets are current assets. So some examples of current assets that are not quick assets: supplies, prepaid expenses, merchandise inventory. The quick assets that we're talking about are cash, short-term receivables, short-term investments, and receivables, okay? So the common rule of thumb with the quick ratio is that you want it to be at least 1. If it's not at least 1, if it's less than 1, that means that your current liabilities exceed your quick assets, and that could spell some liquidity problems, okay? So if we look at this figure here at the top of page 109, you can see that we have our total quick assets, 2704 for 2009, total current assets is 6220, total current liabilities of 2794. We take our acid test ratio, or our quick ratio, by dividing our quick assets by our current liabilities, get 0.97. Then our current ratio is divided by current assets by current liabilities, 2.23, and then we can compare those against the industry. All right. So here's what I want you to do. I want you to pause the lecture video, and I want you to do numbers 122 on page 109, 123 on page 110, 124 on page 111, and then also number 153 on page 111. And I just want you to do it for Trico. So if we look at 153 here, it's saying we have the information for Trico, and then Duco and Unico, its two main competitors. It says calculate the current ratio and then the acid test ratio for each firm. I just want you to do it for Trico. If you can do it for one, you can do it for all of them. So with Trico, we have cash at 9,800, short-term investment 6,400, accounts receivable 12,500, merchandise inventory 30,150, prepaid expenses of 900, accounts payable 19,400, salaries payable of 1,200, and then other current payables of 600. Calculate the quick ratio, and then excuse me, and then also the current ratio just for Trico. You don't need to do it for the other two, okay? So pause the lecture video and do those problems, and we'll come back and check it. All right? Okay, hello and welcome back. So let's see how you did. So with number 122, Briggs Company had $800,000 in sales, sales discounts of $12,000, sales returns and allowances of $18,000, cost of goods sold of $380,000, and $275,000 in operating expenses. What is net income? The right answer is D as in David, 115. How do we get that? Take the 800 minus the 12,000 in sales discounts minus 18,000 in sales returns gives us 770, which is our net sales. Minus our 380,000 cost of goods sold gives us 390 in gross profit. Minus our operating expenses of 275 gives us 115. The right answer is D. Okay? So let's get number 123 over here. So a company purchased $10,000 worth of merchandise on June 15th with terms 3, 10, and 45 on June 20th. It returned $800 of that merchandise. On June 24th, it paid the balance owed. How much cash did they pay? And I went ahead and did the whole journal entry for you here. So you have to take the 10,000, right, minus the 800 that they returned. So that's the outstanding accounts payable. It's a 3% discount if they pay within 10 days. Well, they bought it on the 15th. 10 days later would be the 25th, so they are within the discount period. So they only have to pay 97% of their outstanding accounts payable. This is how much cash that they have to pay. So it's a debit to accounts payable, the 9,200 right over here. Credit to cash. credit to merchandise inventory of 276, which is the 3% of that 9,200. That is our purchase discount. Okay. Let's look at number 124. See how you did. The right answer is E as in Edward. So we take our 10,000 minus the 800. That gives us our 9,200, just as we did before. And then we multiply that times our 0.97, which gives us our 89.24, just like in the other problem. And then we have to add the $500 freight charge because it's FOB shipping. Okay, FOB shipping. So these last two problems were purchase discounts. So I know we kind of were in some of the other lecture videos talking about sales discounts. This is not a sales discount problem. This is purchase discounts. How do we know the company purchased? Okay, this is cueing you into saying it's a purchase discount problem. Plus the $500 freight charge, which is FOB shipping, which means the buyer has to pay. Okay, that's what that means by FOB shipping. $500, so the amount of cash that we'd have to pay is the $94.24. Okay, so as I asked you to do is calculate the acid test ratio and then the current ratio just for Trico. So let's take a look at that one. So with Trico, we come over here and we have our cash, short-term investments, accounts receivable, merchandise inventory, so on and so forth. Then we have our total current assets of $59,750 right over here. And our liabilities are just our accounts payable, salaries payable, and other payables. So our total current liabilities are $21,200. Total current assets of $59,750 divided by total current liabilities of $21,200 gives us 2.82 is our current ratio. All right. Now, in terms of the acid test, we only look at cash, short-term investments, and receivables. So merchandise inventory and prepaids are current assets, so they come in through the numerator for calculating the current ratio, but they are not quick assets, so they are omitted from the numerator for the quick ratio. So it's just the cash, short-term investments, and receivables. Total quick assets of $28,700. Current liabilities remain the same, $21,200. Divide the two. The acid test ratio is 1.35 for Trico. All right. Okay, so I hope you got those right. And now what I think we're going to do is I'm going to pause this lecture video and we will resume the next lecture video by going over this problem, which is a good problem to make sure you understand. Okay. All right. Thanks so much.